Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, I'll go through the market update. The earnings trades, they haven't been good so far. I'm not gonna lie. We'll go through that, and then Joe has some charts. So feel free to unmute and ask questions as we go through. All right. So overall, the SPX Russell still in 4 and 8. You can see a lot more red throughout. Our bullish sectors have basically turned over into two, that XLC, XLE. Everything's pretty much red across the board. For sectors, the big pie. So we were at 18 last week, and now we're just a little lower. We have been, something I like in the new UI, like we have this market pulse stats. So um, it'll give you basically when there's new highs, it'll highlight things. So we've been making new highs with state 8 percentages. You can see there 63%. So almost 2/3 of 4,500 issues are in state 8, which is a telling sign. So so let's look at the overall pulse here. So this is the states, so 1 and 8. So you can see 8's been making new highs, and ones have been dropping pretty good. That had a new low, I think, the other day, for 52 weeks back here. I think, that 864. But if we even, pull this out, back when we started that whole bearish cycle, we got state 8's a little higher, 67, 71, 75. So we're up in that kind of territory. We're, obviously we made new lows for the Russell. The breadth has been pretty bad overall, but SPX has held up a little better. But you can see here, we're at very high levels here with the state 8's. So not much else going on with the, 2s, 4s, all pretty flatline. So I'd just say, like I said last week, just kind of monitor the 7s. You start seeing spikes because that's where they're going to come, out of the 8s into the 7s. Everything else is just, pretty low overall, 12, 20% in these other bearish states, and then little loose change everywhere else. So the big eye is going to be watching, the 7s. So for that turnaround, so these have kind of been dropping new highs and lows. Obviously, we had that big one back at the beginning of October, and just kind of hitting right around that same level here: 522, 557, 31, 574. So those, either something big's coming or we're going to flatten out. Back here we'll get like little ones here, but these are pretty big overall. 500 is not really like the 1,000 type, but back when this whole bearish thing started, we were getting fives, 4, 5, then a big one, and then just very elevated. So either it's turning around or it's the beginning of some more new lows. Hard to say at this point. Obviously, with these kind of indicators, we're way oversold. And I think, Joe went through a bunch of 15%, green pie kind of stats. So it doesn't happen often, but, it's not like a guarantee things will turn around, but usually, we typically look for, that 30% in kind of bullish markets. I think we tried to turn bullish again, and now I think we're just deciding, is this going to be another bearish market, or that we start here, or we're going to get an upturn. I mean, seasonality wise, typically, November starts, we'll get, that late end of the year kind of run up. So that's kind of seasonality wise. My big concerns are, kind of Fed, um, you know, rates obviously 10%. I mean, up around 5%, the 10-year. So, rates and then kind of Fed language, higher for longer. So we'll see what they say today. Um, as far as that, if there's any more clarification, looking into next year. The other one is obviously geopolitical, and there's a hot mess going on over in Israel. So I can see that easily, cascading into something bigger. I think Yemen just declared war on Israel, yesterday or today or something like that. So, that's spreading. Obviously, kind of all bets are off for the market if that thing really picks up. Okay. Yeah, big pie wise is, we got up last time. We'll see 85, and you can see the bottom here in the market, or temporary bottom. So 85. So we're right up around there again. And we had a small dip, but that obviously, but a nice run up here, but turn back over and kind of at the same levels that this last kind of bottom was. So you know, obviously way oversold. Um, it's just a matter of, I think, the indices breaking through, the levels, obviously, onto the upside. So first we'll talk SPX. So state four, we talked a lot about this. This was, stop loss and the 50-day at that point. So, came back down, broke through, this support here at the entry price, and now got into the 1-2, drop below 4,200. It's a big deal. I think it's right above it now. So, this is your battle. I was watching that 42, it broke, obviously had a nice drop down, down to 41. And then, so after that broke, I was watching the Russell, and that obviously made new 52-week lows. So we'll talk about that. But obviously we've been in here longer than normal. Not quite the average move, but pretty close. Average move would be like right in here, and so maybe another 50 points or so. But from here, this thing could stay, kind of chopping in for. Kind of all eyes, I think, right now would be 4,200 for S&P. Obviously after the Fed talk, there should be some kind of reaction. Then, I think tomorrow will be more telling. Usually those reactions have been wrong recently. So big chart wise. So let me pull up the line here. So that's 42 broke. The top up here is obviously 46. So we only spent, 1, 2, 3, 4 days, right? Last time I checked, we were above it. So, definitely, it's basically retesting that right now, right? So want to be able to stay above that 4,200 to, kind of get bullish here. And then from there, you have pretty close. You have two indicators. You have the 200 here and then the 50 here, and those levels. So 50 is 42.42, and then about 100 points higher is 50-day. So we didn't get to that 42.42 today. Let me clear this off. So, let's take a look at quickly where we. So high was 42, basically 30. So not quite there. So just look for these, kind of like we said before here as resistance. If these are resistance, that's a very big bearish indicator. If these On the bullish side, we love when these are support on the way up. Even here, just kind of broke down, got back up, tried again, and finally, broke here, and then here it really told us like, okay, bearish when it failed that 50-day. But had a nice run up, and then obviously, I think this kind of rates really started spiking. Then we got headwinds. So just watch for obviously our range 42 to 46. Staying above 4,200 is critical. And then on the way up, these things right here are going to be resistance. So getting through those would be very bullish, obviously, for the market. If we break below 4,200 again, then watch out, right? It could get ugly because we're so oversold. This is right here. This is when we make new lows in the market. This high of state eights, 2/3 are making, in state eight, and you can see those big numbers that were popping, and pretty much day after day here. So, this is when new lows are made, these kind of conditions. So, we're kind of looking for, are we going to get bottoms here? Obviously, watch those levels. So Russell 8 had a nice little kind of typical pattern, right? So I would say, pretty much check mark. This one is done, pretty close to an average, not exactly, you had a little bit of chop in here, but pretty close to like an average pattern, even like hitting right around the average amount. So with the average days. So from here, typically we can get, maybe like 20-25%, kind of make new lows from here. And then the rest of the time they kind of pop up. So that's kind of in the bullish camp favor. That with all the indicators just being so oversold. But, like I say, despite what these indicators are telling us, we got to get through those kind of key levels to get real bullish. So for here, I'll pull this up so you can see real quick, 52-week. So that's been made during this. That's right over in this range here, 1633. So it was 1641, and that's from the previous couple years. Since this bear started back here. So we had the 1641 here, kind of double bottom 1641 here. So we did, make a new one, 1633. It was 2 days there. So obviously it's not a good indicator for the market. But if it does find, strong support in this area, the 1641 area, then that is a good sign. Obviously oversold. I think what we really want to watch is, our critical level, 1700. So, if we can make another run, get above that, obviously very bullish. And then, you'll have your other, kind of resistance here in these bands. 1800, it's been, pretty decent, but, obviously the critical ones are, the top and bottom of that range, 17 and 18. So this will be, I think, pretty strong resistance to get above that. So that's what I would be looking for. If we look at the three peaks here that we had before, these were all lower highs. This one, barely touched 17. This one, is kind of looking similar. So to see if this starts aligned or not, because these things have all been really close in their action. Down, up. This one's down, flat, up. This one's down. So we don't know if it's going to be flat, up, or worst case scenarios, the thing, could tank, with current indicators, but, like how things are positioned, could obviously tank, but, if it's, repeating like it has the last three times, all these moves, it had like the retest, fail, retest, fail, retest, fail, all the way back down. So, we've obviously completed that, and that talks about that possibility, especially once we failed here. So really, we're just watching 17 on here. Getting above that, be very bullish, I think. So that's how I see the indices positioned right now. Let's look at 10-year real quick. That popped up near 5, so it's kind of relaxed a little. 4.8s now. But you can see we did get up 4.997, pretty much 5. I think, just kind of, eyeballing this chart, I think 4.75 is kind of where we'll see. If it, gets down there, like pops up, then obviously it's like a kind of new level. And that's been walking up recently, from like 4.5. So we'll just have to kind of keep our eye on that. So Fed day today, no real expectation of anything. Rate wise, 98.8%. So for no hike, December's kind of moving that way a little more. And we were around 30 for a possible hike now, kind of pricing in nothing right now. So I think what's key is, what comes out of there with their phrasing, and if they start leaning more into 2024, obviously higher rates for longer is going to be they continue that theme. It's obviously going to be bearish for the markets, and from there, we'll see rates like Sadir talked about last week creeping up higher, the back end of the curve. This one just continues nice, slow, steady runoff. Still quite a ways from 7,500,000,000. It's ridiculous, the amounts. And I'll pull up the last one, just the rates. I do like this rate chart. So, this getting up at least flat with like the 5.5 kind of range. They say higher for longer. I just expect this to keep moving up. If not, if people think they're done, then I wouldn't, maybe it could crawl a little higher. If they say basically like we're done, but we're going to hold that for a long time, I'd still expect these to creep up some, but not drastically. So that was a quick summary. People asked me last week. I got some data. We were talking about the consumer being in problems. So this one is large bank credit card delinquency rates, and then all other banks. So down here is the large banks, 2.6%, nothing, but you can see the other smaller medium banks, a lot higher rate, 7.5, which is basically the highest since back here. That's like COVID. Yeah, that's right when COVID popped, and before that, this is 2002. So high levels for, and this goes back to 91, at least for the other banks. Other big banks look good, right? And let's see here, we got another one. I think Lee asked me about cars. Let me, so this is car delinquencies. Bad. So this one goes back to 94. So we're popping, I'm not sure when that is. 97. I don't know. I was still in college at that point, but obviously high levels now, comparatively. So this was the run up to, like COVID, had all those stimulus checks. So people were fine then. Now we're just back, above and, where we were pre-COVID. So consumers in trouble. And, you can see that from a lot of the reports out there, like, trying to think of one that's offhand. But I've been following like the retail, someone's just been getting crushed, with their earnings reports. So that was it, market update wise. This one like Estee Lauder or makeup, down, earnings just got crushed, CVS crush. Yeah, the tech seems to be holding up for the most part, like the big tech. So, all right, I'll open up to questions, comments on the market.
This is Dave. I got a comment like
Yeah, Dave.
the usual.
Yeah.
um, since Fed talks today, I think, and Apple, I think, reports tomorrow after the close, it's this week in earnings that after the Friday and Monday open, or Monday, this Friday and next Monday's close are kind of the where I typically look ahead for the next, 3, 4 weeks or so for near
Mm-hmm.
term kind of outlook. Because I think I mentioned before, I think that a lot of the big markets, the let's say the retail investors follow whatever Apple ends up doing is kind of where they're investing. And I don't know, if you put up the Apple chart, you'll see it's kind of like in a downtrend where we're making lower lows and lower highs, and we'll see how they're, whether I'd say tomorrow can, correct that or not.
Mm-hmm.
Um, but the VIX is, I think, been moving up for 2 weeks now, even though there's more, single day expirations happening all the time now. It's been moving up, which isn't a good sign either. But the Fed meeting is now going to be over with after today, so that'll drop back down a little bit. Anyway, so I'll look at. I'm not don't know whether it's going to be up or lower, but I'll kind of make my own personal call like next Monday or this Friday. I think are the key dates where I look at things. Now, if the Fed doesn't raise rates and they're not supposed to, or according to the people that put money on it, um, and they still talk tough. And if there's a significant amount of people that still think there's one more rate hike, it would have been better to do it in October than, in December. If they do it in December and it's a choppy market all the way up to the December meeting, it's 6 weeks between today's meeting or this week's meeting and the next one. There's 6 weeks instead of a month, so a little bit more time. But if they end up having to actually raise rates next meeting, we had I was looking back to try to find when that happened last, and it was disastrous. I think it was a 2018 Christmas Eve crash kind of thing when the Fed decided, well, we're going to raise rates, and it was like the one straw that broke the camel's back raise kind of thing. And so I'm hoping that doesn't repeat. Anyway, it'll be interesting to see how the Fed meeting talk is at the end of today. I think that'll be influencing for the rest of the year. I don't know where we're going to end up at the end of the year, but I would almost guess right around 4,200, unless we really have a breakout and the Fed says something like, "Oh, we're done raising rates." That would do it, but I don't think they're going to say that anyway.
Right. Yeah, well, I think, monitoring the like inflation numbers. I think the last one was a little hot, but nothing like extraordinary. But you guys know my opinion. I think Fed should have been done a while ago and just let it play out. I mean, it's obviously having an impact. Like these higher rates are having an impact. It just takes a while for things to feed through the economy. And I've shown you many, real estate, like, just like those credit cards, the savings versus, like it's just, everything is, it's deteriorating, like, by design, but, I don't think they need to go this high. They just needed to really just kind of put the brakes on the crazy real estate stuff going on, you know. But now, they got mortgage rates. I think they were close to 8%. The car payments, like those loans are, a lot higher, obviously, for everyone. So just the cost of capital for the regular consumer, and you can see that in, all those charts I showed you guys, savings versus credit cards. This one from last week. Let's see if there it is. There's our savings now. So this is COVID. Everyone had money, extra money. And obviously they just spent it. And then the revolving credit, pretty much right here. It just flipped and went back, and now we're higher than and lower than we were pandemic. So it's just they're hitting. It just takes a while, and
Well, the
hopefully they
conference,
don't break. Hopefully they don't break something, and then if they do, then that's when the pivot happens, and the market will get real ugly until finds a bottom. That's kind of my thought.
yeah, the conference calls that I've listened to this quarter compared to last quarter, I've heard more talks about watching inflation starting to bite a little bit more, and their forward guidance, have been more lowers than higher, and more talk about let's talk about any raises, guidance raises. Um, Not talk about raising prices like they were in the last couple of quarters that I've noticed. So less corporations raising their prices,
Hmm.
and is what I've noticed more about this earnings season than the last one. So I don't know whether, but I only listen to a certain sampling of earnings calls. So I don't know if anybody else has listened to a few, if kind of be interested in what they think about the calls that they've listened to as far as general guidance up or down, or price raises. Just curious to if there's
I
anybody
saw
else that.
McDonald's had a good earnings, like because they raised all their prices, and I saw something on Twitter. There was like a Big Mac meal. I think it was in California. It was like some town. It was $16 for a Big Mac meal. So I think the ones that could price have, they have pricing power. They've obviously done that. I don't think they're going to continue unless we get another splurge of
That
inflation type thing.
Yeah, it depends upon the market segment there, but like Netflix raised prices, or was shutting off free subscriptions. Meta just decided to do the same thing, I think yesterday or today, and their stock prices went up when they started to reduce the free services.
Hmm.
So I think that's a trend too. But it's the companies like Procter and Gamble, or uh, the consumer staples that are starting to stabilize their prices a little bit better in that group.
Hmm.
Maybe index investing is easier to do than stock picking these days. I don't know about that. I don't do enough of either to compare.
Yeah, yeah, obviously, a lot of these, I mean, you can get slammed on these earnings. I've seen quite a few companies just get crushed. So, yeah, you just have to beware. Obviously, you're probably safer, doing like an index, like an S&P. They got the big boys in there that can help prop things up, but can also get dragged down, if Apple is bad. Pretty good if Apple has like a disaster, which
Yeah,
they usually don't, those big ones, Microsoft and all that.
the longer for the higher for longer rates, I think, hurt the Russell a lot more than any other index. And those companies in the Russell that don't have a lot of revenue yet, and still have high EPSs are the ones that are getting crushed, like you
Yeah,
say.
oh, yeah, yeah, definitely. I mean, they need the capital markets more than, these big companies sitting on cash piles, they gotta go to the market and be like, all right, I'll take, you with my triple B rating, I'll take 10-year bonds for 8.7, that instead of what they're getting 4 before or something, it's probably doubled their expense. So
Well, let's hope for a Santa Claus bounce here.
yeah, yeah. I mean, seasonality wise, yeah. I mean, it should, it typically runs up, the end here, but and we're in November, so
Hey,
all right.
Josh, Dan here.
Yep. Hey, Dan.
Yeah, you mentioned the Big Mac meals. I was on the in Boston the other day, and I stopped in one of the road stops on I-90, and that's what they were. They're up around $16. So, but it's like that. I'm up in Connecticut. I'll be up here for another 2 weeks, and I go back to down to St. Pete. But the restaurants up here, the prices are going up. You got shrinkflation going on as well.
Right.
A lot of my friends are, they're cutting back. So I think I know the restaurants now they're having a hard time getting help. Um, so I don't know what's going to happen with that. But I was reading, there's a Forbes, there was a chart that showed the number of bankruptcies on the rise because of the current interest rates and, longer forever, and
Yeah.
yeah, Forbes in September, bankruptcies, business commercial bankruptcies were up 17%. There was a chart. I don't know. I was just looking for it. I don't know what I did with it. It's one of my screensavers somewhere, but that'd be an interesting chart to look at if anybody can find it. I'll look for it later.
Yeah, I've seen anecdotal kind of reports on stuff, but you never know. I mean, they go bankrupt, but they're around for another 10 years, like I think Sears is still around, right? They went bankrupt a long time ago, but yeah.
Yeah.
Well,
A lot of the big stores are closing, a lot of their shops. I see that going on as well.
mhm. Well,
Yeah.
I've seen there's like the crime and the theft. They've in some of the big cities, like they're closing stores
Yeah.
there. Yeah, seen
Yeah,
a
up
lot
here.
of
I mean,
that.
I'm looking at some of the malls up here and they're like, I mean, they used to be bustling with traffic and now I look and there's, just a squandary of cars. I don't know how they
Mhm.
stay open. A lot of stores in there are vacant, but it's not a good sign, especially just before, Christmas coming up.
Mhm. So yeah, yeah, I'll
But
keep
the
my eyes
economy's
peeled
doing
for
great.
that. Hmm?
But the economy's doing great.
Yeah, record unemployment. You're right.
Yeah. Yeah.
So, all right, thanks, Sam. Thanks, Dave. Anyone else? All right, I'll run through these real quick. Earnings has not been that good, so we'll start on the bottom. Non-mover. So, we had 3 close. I showed you guys that last week. It was pretty much break even. Um, WDC, Western Digital, that thing like spiked, but came back down. Not sure where it is today, but had a big earnings spike, came back down pretty close to profit target. So looking better, but the first spike, was pretty, especially at the open, I was like, wow, that's really up there. But it can, it's come back. So, that has until the 3rd. So a couple more days there. Obviously, if you had a profit after that spike, I would have took my money and run. Vol rise, there is Disney. I think this is the only vol rise trade. This has been pretty consistent, like not like huge margin, but it's been a pretty consistent winner. So that one's up a little bit. I think it's got a week left on that. Bearish runners, it's just like a hodgepodge of all this stuff. So you can see we're down like 100 at 3 open. Verizon, Intel are down, XPO's up a little, and then we had one close out that hit the profit target. So that's kind of like the theme for this earnings. Definitely not a blockbuster one. Bullish runners. So same thing, down like 5 total. So up a little bit here. So we got, PSX that'll probably hit today. I think that was a pretty good. Abbey Vase kind of flat. STX, I didn't check that one today. Dow, so they're all pretty close here. We did have this ACN, this one got killed. So, down 5. But, these other ones obviously can turn around. So it's not been a good earnings. And then bullish pre-runners. So down 300 so far. Got 9 closed out. You got a couple open here. Still, Cirrus, what is it? Cirrus Logic or whatever. It's got a day or so left here to kind of make comeback. MGM's down just a fraction. And then DHI's up pretty close. So, those all end, at the earnings get out before. So, but overall, these have 9 closed. I think 1, 2, 3, 4 losers, and then 5 winners. So it's just not been good overall. So, and that's kind of reflecting, how the market's been. We put this out. Let's see. September here, 9/15, right? So, we're down 250 points from there. Maybe we get a nice rollback, or the bearish trades kick in for us, kind of level things out. I think we're probably down like 1,000 right now, and that'd be kind of my estimate. So, but I'll keep monitoring. Any questions on that?
I'm having the same experience.
Yeah, it's not a good.
Yeah.
So they can't all
It
be
happens.
winners, but yeah, we like to have at least 3 out of 4 quarters a year to be winners, but we'll see. Yeah, we can maybe turn this around. So still got time. Okay. Thanks, Adir. Anyone else for Joe gets running here? All right, Joe, you're up.
All right, Josh. Hi, everybody. And yeah, I know we get the Fed meeting, so I'll kind of make it quick. But let's see, a couple things. To Dave's point about the Apple earnings tomorrow, remarkably, I think 89 billion in sales for the quarter is what they're looking for. That's just a pretty staggering number. And a couple estimates I had seen were $1.39 a share. So we shall see. Josh pointed out, some of the numbers, came in a little bit hot in the last week, beginning of this week. We've got non-farm payrolls this Friday, which certainly were incredibly hot, last month. According to Trending Economics, are looking for 190,000 this month. Last month it was almost twice their estimate. So that's Friday. We get some ISM numbers too, jobless claims tomorrow. And then typically the week after non-farm payroll, not a lot of numbers, in the market. And that's the case next week as well. So in terms of the charts, and, Josh pointed out, just the fairly staggering level of state eights. I mean, the market's been tough. I mean, not that it's ever easy, but, we talked about, the pie being below 15%, that ran, October 4th, 5th, and 6th. below 15%. Also last Friday, and then we bumped back up into the low teens, or excuse me, the high teens, and then just got fractionally below it this past Friday, the 27th, just a couple hundredths of a percent below 15. And so in that 4-week period, I mean, basically that October 4 to 6 period, market sort of bottomed, depending on your index. I mean, S&P ran about 4%, NASDAQ ran around 5%, just in a couple weeks, and then bang, we dropped through those old lows, and basically, about 4% lower, in the lows versus those October 4, 5, and 6 lows where we had the pie at just below 15%. So then I got to thinking, okay, if you're, we certainly been talking the 4,200 level in the SPX, but another number that we've been talking about for quite some time is that 4,180 level. Now, 20 points in the S&P in a market like this, is nothing at all. But we did get down to that, and so backing up, thinking retracements. It was this time last year where the market bottomed, and away we went. Either the October 13th low, you got some retests at the very end of the year, and then off we went. But if you do your retracements going back to last year's October lows, S&P essentially finally got to the 3/8 retracement last week at 4180. We traded lower down to 4127 on the 27th. So, we got the retracement in there. It's from and my charts unfortunately here are a little corrupted, but we got the retracement there. We fell just shy of NDX, which hadn't been anywhere near the retracements. Basically October 4 through 6, we bottomed around 14.5, rallied north of 15.3, and then all the way back down to essentially 14,000. We're talking, just small differences here. The 3/8 retracement off, the spike low and the spike high would be 13,966. We traded down to 14,000. So for all intents and purposes, you got your retracement, in the NASDAQ as well. So, we'll see how the market reacts to the Fed and non-farm payrolls on Friday, and see whether we get some kind of bottom in the market here. As Josh pointed out, the Russell made a new low. We had those, it was the 1900 levels, but the double low in Russell was the 1641 level Josh referred to, traded below that, and I think just laying around that level now. For next week, I'll try to do a review on how the S&P earnings are coming in. Currently they're still coming in, ahead of expectations, which seems to be par for the course. I was going to pull up the Magnificent Seven, so I will just pull up those charts. They're all dated 10/27. Again, a bit of a glitch, in the new UI at the moment, but I will say, of the 7 Magnificent Seven stocks, we're looking at charts here with a last of 10/26 or 10/27. All but one of those stocks are now higher than what the charts show here. So only Tesla, which on the 27th was, at 201 is currently, was 207 is now at 201, a little bit lower. The other 6 stocks are all higher, and I'll just run through them. XLK slightly higher too. I think we talked about this 160 level being, pretty significant. We traded, down to that, and right now XLK is trading 165. So, I think we've talked about this as leadership for some time. Just keeping an eye on that 160 level in XLK. Personally, I think is darn important. And then the Magnificent Seven, you had a big pullback in Google. Of the 7, 6 of the 7 are in bearish states. nothing in state 8, but a combination of 2s and 4s. Only Microsoft is bullish in state 1. So I'll just run through these charts real quick. You can see, you know, on earnings, Alphabet or Google sold off pretty good. Next is, you know, Amazon, you know, making, you know, kind of lower lows. Whether some of these charts, I'll go back to Google too. You know, Google's just kind of a, you know, no real wave count there. You just got a big spike down. You know, you may have a bit of an ABC in Amazon to the downside here, but you know, I guess its recent low in the what was it, 118 range. You know, important to maybe keep track of. Amazon at this point, you know, all the way back up to 136, so well off those lows. The others, Apple, as Dave was talking, and Josh, just kind of slugging along lower lows. Apple, you know, 4 points above the chart at 172. You know, Facebook, Meta, you know, just kind of slugging along here, 306 right now. You know, the chart's showing a 296 low. Microsoft, the one that is, you know, in state 1, just trying to find its way, 344 though. So doing, you know, a bit better. Got a long way to go in terms of the average move in state 1. So Microsoft, you know, probably another one to, you know, keep an eye on for potential market strength. And lastly, NVIDIA, trading at 417 now, you know, well above the low last Friday. So, you know, we'll see what the Fed says, see how the market, you know, moves with a non-farm payroll number. And, you know, as I think everybody, and Josh especially pointed out earlier, this whole geopolitical situation overseas is, you know, a real dark cloud for the markets. So, there are just a few charts I wanted to pull up. Next week, we'll make sure that they are current. Sorry about the glitch in these things, but happy to take any comments or questions if anybody has them. And if not, Josh, turn it back to you.
Okay, anyone else? Questions, comments before we wrap up? All right, well, thank you all for attending. We'll do it again next week. Thanks,
Okay.
guys.
Bye, everybody.